But MRF, Apollo Tyres, the entire pack is holding out just very smartly. MRF, one amongst the top movers today, over a 3% move, 11,300 is where that stock is right now. There's Apollo Tyres as well, which is holding up by about almost 3% as we speak. And the Nifty as well going very strong. That 0.5% uptick stays. We're around that 19,850 print on the Nifty futures. But let's welcome on board Suniti Bhat, the MD at Selan Exploration Technology, to talk about how their quarter has been and where they see things going forward as well. Suniti, great to have you on the show. Just wanted to understand in the second quarter, your average production was about 681. But given that most of your wells started producing somewhere during Q2 and were not operational throughout, wanted to understand what's the current production rate and where do you see that headed in the next few quarters?
First of all, thank you for having me here. And yes, we had a good quarter. As of now, we pretty much got the production uptick sometime in the middle of the quarter. As of today, our production is to the north of 750 barrels coming from various wells. We still do not have all the wells fully contributing, as we have come out and said. The key field, which is Bakrol, we still sometime in the middle of November are going to frack a couple more wells. And towards the end of next quarter, we should see the full impact of the development campaign that we had started out sometime at the beginning of this quarter. So we expect that we will stay within the guidance that we had given the market when we started the drilling campaign, that will be somewhere between 750 to 1,200 barrels. So we're still pretty confident that we should be within that range somewhere.
Real big breakout production year come for you. Will it be FY26 or beyond that?
I think for us, we definitely, I think we also announced a merger with our other group company called Antelopus. I think for us, the next few years will be about production growth. We are really looking at growing our production volumes, both from the Selan assets and in case the shareholders approve a merger through the Antelopus assets also. So I think for us, the idea is to create a mid-sized oil and gas company as we go forward in the next fiscal and the fiscal after that.
Your most optimistic case, and please correct me if I'm wrong here, for FY24 was that of 1,200 barrels, right? How confident are you of achieving this and scaling it up higher, perhaps?
I think from the core Lohar, Bakrol and Karjisan fields, I think we have had good positive surprises from the Karjisan field. Bakrol has come out on money. I think Lohar has been a little bit a declining field. We didn't get as much as we expected there. But overall, we think we'll be definitely towards the upper end of the guidance if we will not cross the 1,200. But we think this is just the start for us as far as Selan Oil is concerned. I think the growth years will be the year after and another year as we go through this whole journey of building a credible energy company within India.
Listed entity, which is what we're talking about right now, once post-merger, what will change? Because the numbers what we have for Antelopus Energy, they have oil reserves of 480 million barrels. I mean, that's a huge number.
So I think that I just want to make a correction. I think in our parlance, reserves come in various categories. We have what we call proved plus probable, that is for which the development plans have been approved and all. We have reserves around 50 million barrels. I think what you are quoting there are also discovered resources within our assets, but they are called contingent, for which we have not put in the field development plans. But yes, from a reserves comparison perspective between our onshore Cambay Basin assets and what we have in Antelopus, we do have a robust reserve base that should help us get to a much larger production volume that we have as of today, going forward into the next few years.
Just a follow-up there, because analysts are penciling, given the internal reserves that you talked about at Antelopus, the revenue potential could be around $2.5 to $3 billion over a period of time. How realistic is that number as per you?
I think look, the revenue potential, as pretty much these days we all understand, a big part is always going to be the oil and gas prices, which we don't control. I think because the 50 million barrels out of which for which 2C reserves are there, I think this is definitely a lot larger than what we have in Selan. So I wouldn't like to comment on the 2.5 to 3 billion barrels, but we know that we will definitely have production potential that's an order of magnitude different to what we currently get from Selan fields. That is from the Antelopus fields. That much is evident based on the 2P reserves and third-party audit of these reserves and the development plans that are already filed with the regulator.
Equity capital and the share capital of the merged entity, can you throw more light on that, and eventually where will the equity base move going forward?
I think currently we have engaged advisors, both the boards, both Selan as well as Antelopus board. We have engaged advisors to look at what the swap ratio could be, and therefore what the overall share capital for the merged entity would look like. We are hoping that we would come back to both the boards with the recommended swap between Selan and Antelopus. And then the board will have to, in their wisdom, look at it and then recommend to shareholders and the stock SEBI as well. But we expect that between Antelopus and Selan, we definitely should be able to create a decent size company going forward, both in terms of share capital and the growth potential.
The value, according to you, for the oil reserves of Antelopus, because what you just said in technical terms, the probable and the discovered reserves, we can ascribe a value to it. So is there a value which you can ascribe to it?
I think, look, there are definitely market benchmarks that are out there that can be looked at, and you can work out a value to it. But I also want to say is that we use typically dollar per barrel valuation numbers, but a lot of it, the way we look at it is that we are in India. India needs a lot of energy going forward. We have these resources that are discovered within the Indian basins. So therefore, we are sitting on top of commodity that will have need over at least next foreseeable future and is going to do its bit towards growing the economy. So the reason I'm not giving you exact numbers is because to me, that is not what is governing us in terms of how we are looking at it. What is governing us, we want to make sure that irrespective of what the oil price is in short or long term, that we can keep on producing and adding a healthy, adding to the healthy bottom line for all our stakeholders, and also generally producing more oil and gas into our country, which actually relies on imports for energy.
Okay. Now I'm going to ask, let's say, a direct question here. Selan Exploration, that's the listed entity. Antelopus, that's a non-listed entity. The merger will happen. So this is 2023, October 2023. 2026 or 2027, October 2027. What should the current listed shareholders of Selan expect in terms of progress, in terms of value unlocking, in terms of the path to profitability and growth? Because the listed entity, things will change, sir. That's what I think the exciting part of Selan now is.
That's correct. I think, let me just dial back a little bit. I think for the shareholders of Selan, the way to look at it is, till now, Selan has given them exposure into one basin in this country. This country has at least 4 producing basins, or what I call category 1 basins, and multiple category 2 and category 3 basins. With this merger, first thing that will happen is that the shareholders of Selan are going to get exposure into multiple basins. All the Selan assets are in the Cambay Basin. Antelopus assets, on the other hand, are in the north of KG, both onshore and offshore, in Assam Arkan Basin and the Mumbai High Basin, all of which have been proved to be very prolific basins, similar to what Cambay Basin is. So first of all, it's going to decrease the risk to the shareholders, which is inherent in our business because we have a multi-basin exposure. Second is, it is also increased the amount of reserves that we have in our portfolio. The third is going to be definitely the shareholder should expect of the management to drive a production growth trajectory, which is an order of magnitude different to where we are today. That is what they should act. So it should be an accretive to the bottom line. It should be an accretive to the market cap. It also should be an accretive to the value creation for all concerned as we go forward over the next 3 years.
We let you go. Appreciate you making time and speaking with ET now. In the meantime,